All right, guys, I got one simple question for you. Are Californians ruining the real estate market in your city? Chances are the answer is yes, especially if you live on the west side of the U.S. What we've seen over the last couple years is there's been mass migration out of California. People are leaving cities like San Francisco and LA in droves in the tens of thousands. And then they're going to new cities like Boise and Reno and Phoenix and Vegas and Austin. They're going to these new cities. And what are they doing? They're bringing their California sky-high real estate prices with them. And this is a trend that's really concerning. It's causing a lot of issues for you guys in these cities. A lot of you earn the local wage and you're saving up for a home and you want to pay a reasonable price. And then all of a sudden, a Californian swoops in. They make an all-cash offer, $200,000 over ask. And you're screwed. You're locked out of the market, and now home prices in your city, whether it's Boise or Austin or Phoenix, are now approaching California levels. And that's a problem. That's a real problem, because Californians are exporting the real estate bubble from their state and bringing it to other states. So what we're going to talk about in this video are three things. The first is looking at specifically the cities that are experiencing the most inward migration from California. Where do you need to be most concerned about this California influx and the associated increase in real estate prices? Number two, we're actually going to take a look at how much prices are going up in these cities that are experiencing high California migration, so you can see just how bad the situation is in terms of appreciation and lack of affordability. The third thing, on a more positive note, is we're going to look at how this is a completely unsustainable phenomenon and how this actually happened before. This is not new. The same thing happened 20 years ago, people leaving California, going to new cities and bidding up prices. Well, it ended in disaster for a lot of those California buyers and investors. A lot of them lost a lot of money, and I suspect the same thing is going to happen again. So we're going to look at data on that as well. Let's get into it, guys. All right, guys, the first thing we need to do is establish some context and to understand, specifically speaking, through data, what are the cities that are actually experiencing the most inbound migration from California? Because there's a lot of misinformation on this. I feel like when I talk to investors and owners from around the country, like literally in every city, whether they're in like Atlanta or Wichita, Kansas, or like North Dakota, everyone seems to say Californians are invading their city. Of course, this can't be true everywhere, right? There's some cities that are actually receiving a huge influx and deluge from California, others not so much. And you guys can see that phenomenon outlined on this graph where we're looking at the total net migration from California into cities, metro areas specifically around the country. And what do I mean by net migration? Well, that's the amount of people moving in from California to a certain metro minus the amount of people moving out to California. And just for an example, we can see Phoenix here is number one, has the most net migration of any metro in the US. We can see that on average, it's about 37,000 people come in from California in a given year. Phoenix sends back another 20,000 back to California, and that's net plus 17,000 people from California in a given year. And Phoenix, you can see, is number one. Vegas is number two, also around the same amount. And Phoenix and Vegas, these are really like the leaders. These are the all-stars in terms of total migration from California. Number one and number two are Phoenix and Vegas. You can actually see Dallas is number three at plus 12,000. Portland, Oregon is number four at plus 10,000. And then you have a pretty big drop off to Seattle at number five, Boise number six, Austin is number seven, and we head down the list to Reno, Denver, and Eugene, Oregon. Now, the total number might not be the best indicator of the relative intensity of that migration, because, for instance, Dallas, the metro in Dallas has 7.5 million people in it, right? The metro in Boise has 730,000 people in it. So maybe it's not the total migration that we need to look at. It's actually the percentage migration. The total migration in a given year divided by the population. If you guys are enjoying the data presented in this video, please just make sure to hit that like button. I spent a lot of time putting this data together for you guys. In return, just hit that like button. Helps me get a little bit more exposure on YouTube when you do that. Additionally, please make sure to comment. I want to hear what your thoughts and perceptions are on the U.S. housing market, especially if you're in one of these cities or states who's experiencing big influxes of California migration. I want to hear what you're seeing. When you guys comment, it makes me more informed. It makes these videos better. So make sure to do that. And that's actually what we're looking at on this graph. The total migration from California in percentage terms, migration divided by population. And you can all of a sudden see that this list is heavily reordered. Dallas is gone. There's actually, on a relative basis, its California influence is pretty low. What's number one? Now it's Eugene, Oregon. Eugene is receiving 3,500 people from California in a given year on a population of 380. That's plus 0.9%, which means that in a given average year, Eugene's population is increasing by 1% solely from California net migration. Excluding everything else, California on its own is accounting for 1% population growth a year in Eugene. Reno is around the same level, as is Boise and Las Vegas. These four, Eugene, Reno, Boise, and Vegas, are just like a cut above. They get more California migration in percentage terms than anywhere else. If we head down this list, we also see Portland, Spokane, Phoenix, Fort Collins, Colorado, Provo, and Tucson. Austin is actually number 11, which I thought was pretty interesting. Austin often gets heralded as like the number 1 destination for Californians. We can see that it's pretty high, close to the top 10, but it's not even close to as much as Vegas or Boise, which I thought was interesting. And guys, just a quick point on this data. It comes from the U.S. Census Bureau American Community Survey. They survey Americans every year, and they ask the question, did you move in the last year? And if so, where did you move from? And it's this data which allows us the insights that I just showed you. Now, the most recent data for this is from 2014 to 2018 on average, so it's the average of each of those years. It might be a little stale at this point. I wouldn't be surprised if some of those numbers and percentages are higher based on increases over the last couple of years. However, I think it's a very accurate reflection of which cities are receiving the most people from California. Now, it's with this data that we can really do some fun things. We know those metros and those counties are receiving the most California migration. Now, how much are home prices going up in these areas? Are we seeing a strong relationship between that California migration and between the home price appreciation? And the answer is undoubtedly yes, we are. These areas at the top of the list on a percentage term, Boise, Reno, Eugene, they're seeing huge spikes in real estate prices. Conversely, the areas that aren't experiencing much California migration, they're not really seeing increases in real estate prices. And this is an amazing phenomenon to observe. So what you're looking at on this graph, guys, is on the x-axis, we're looking at that California net migration percentage, which again is the percentage that your population increases in a given year just from California migration. We're comparing it to the increase in home prices that's occurred over the last 5 years, and we're looking county by county. And the first thing you can see is this trend line, very strong relationship between the two. And let's just take some examples. So we have Ada County, which is in Boise. Ada County receives 0.9% California migration in a given year. Home prices have doubled over the last 5 years. Kootenai County in Idaho, in Coeur d'Alene, similar thing going on. Cali migration of plus 1%, home price growth of 80% over the last 5 years. Lane County in Oregon, which is where Eugene is. Washoe County, which is where Reno is. And then Clark County, which is in Vegas. All experiencing the same type of situation. So the thing to take away from this, the higher that migration from California, the higher the real estate price appreciation. If we go to the opposite end of this graph, we can see the reverse effect. So for instance, New York County, which is Manhattan, has negative California migration, means it's sending more people to California than it's receiving. Well, not surprisingly, home prices are actually down by 5% in Manhattan over the last 5 years. Similar situation in Honolulu. Honolulu is losing people to California. Its home prices have only gone up by 10%. So again, just as California, the higher the California migration is, the higher the appreciation. The lower the California migration is, the lower the appreciation. Guys, but this relationship gets even more powerful when we look at an additional data point. And that's the relationship between non-California migration and home prices, which we can see is non-existent. So to be clear here, what we're looking at now is instead of the migration coming in from California, we're looking at the migration coming in from all the other states, excluding California. And so this counties here on the right have lots of inbound migration from 49 states, not including California, but they don't have price appreciation. And this is the key point. California migration impacts price appreciation. Migration from all the other 49 states does not impact price appreciation. Which, when I saw this, guys, I was like floored. I was like, holy smokes. Migration in general doesn't seem to matter, but migration from California does. Guys, so this is a pretty amazing data. We're like proving this, actually. We're proving the suspicion that the California movers into states like Arizona, Nevada, and Idaho, as well as Texas, are causing big surges in real estate appreciation. We're also proving that movers from other states don't cause that same appreciation. And I think there's three principal reasons for that, for why the California transplants have such an outsized impact on local real estate markets. The first is, well, they make a lot of money, right? They often have high-paying jobs in tech that allow them the capital to overpay for real estate when they move. The second thing, like we talked about before, is that they're often selling their home in California at a really high price and then going to a market where prices are lower, and thus they can afford to overpay by even more. But guys, the third reason I think might be the most impactful, and that's because, simply put, Californians are bad real estate investors. They don't really understand how real estate works. They think that what they experienced in California in terms of price appreciation is somehow going to happen in other markets around the US. And I got news for you guys, it's not. And this actually was a running gag at my old company when I worked for a real estate company in Boston. We would do deals all around the country, like big loans and investments in apartment buildings and retail centers. And we had a running joke that if our partner or borrower was from California and investing out of California, that we needed to do double the amount of due diligence, because the suspicion was that they didn't know what they were doing and that they were going to lose money. So yeah, guys, if you were to ask around like the commercial real estate industry, the more institutional industry, this is a very true reputation that Californians have as being bad real estate investors. And a lot of it was born in the last housing crash. Because guys, the same exact thing happened 2001 to 2006. Californians, they left California. There was outward migration. Investors started leaving California and investing in the very same states. It was the same states last time around: Idaho, Arizona, Nevada, and a little bit of Texas as well. And then what happened? Well, these California investors, they came in, they overpaid, they didn't understand the local markets that they were getting into, and they ended up losing a lot of money when prices crashed. And guys, the same exact thing is going to happen again. Because when someone comes in and overpays by $100,000 or $150,000 or $200,000 in cash, that means that there will be a crash. Like, there's nothing sustainable about that type of movement. And what's going to happen is that prices in California are eventually going to dip again. And when that happens, the flood of people moving out of California are going to go back to California, and they're going to leave markets like Boise, Reno, Phoenix, Vegas. They're going to leave markets like that in the lurch. And you can see the historical evidence for this on this graph. We're taking a look at two things. The blue line is home prices in California. The yellow line is net migration into or out of California. What we can see from 01 to 06 is that we had a trend where prices surged. They more than doubled. The typical home price in California doubled from $250,000 to $520,000. At the same time, migration went from net positive, $200,000, to net negative by $125,000. So you can see there's like an inverse relationship. As prices went up, migration went down. Then what happened over the next 7 or 8 years? Well, prices went down. In the last housing crash, migration into California went back up. So basically, a lot of these people that left California before the last housing crash moved back when it became more affordable. And then we basically had a period where migration in California was pretty good again through like 2015. But then home prices started going up again, and the same exact thing happened. Now migration out of California is down to minus 214,000 in 2020. Home prices up to 592. And it's really important that you guys understand this. There's a very cyclical nature to the exodus of people out of California and then the movement back to California. There's nothing new about the movement out that we're seeing in the last couple of years. It all happened before in the early to mid 2000s. And most of it is driven by real estate prices. When prices get too high in California, people say, screw it, I'm going to leave. And when prices get cheaper, they say, hey, I'm going to move back. And this is something I'm actually observing in Austin. I know a lot of people from California who've moved here, and I get the sense that a lot of them necessarily aren't here for the long haul. The way they talk about California, they talk about it in very reverential terms. They love California. They just feel like they needed to move because they were priced out and maybe certain other things like the lockdown. But guys, let me tell you, as life returns to normal in California and when prices go down in California, this migration train is going to head into reverse. And when it heads into reverse, just like it did 10 years ago, 15 years ago, it's going to cause huge problems in Idaho, Nevada, Arizona, Texas. It's going to cause huge problems in these real estate markets that were relying on that California migration drip feed, that California migration of people overpaying in cash. It's going to head into reverse. those Californians are going to lose a lot of money. Like, I can pretty much guarantee that. Californians are notorious for being bad real estate investors, not understanding the local dynamics of the markets that they enter. They come in, they overpay, and then they lose their shirt. So the good news is a lot of these Californians who are overpaying, they're going to lose a lot of money, and prices are going to get cheaper in a lot of the markets that they're buying into. So guys, I know a lot of you probably asking, Nick, when is this going to happen? When is reversion in California migration going to occur, and when is it going to create cheaper prices in states like Idaho, Nevada, Arizona, and Texas? Well, the thing I would watch for, guys, is look at the tech space. Look at what's going on in tech. Because a disproportionate amount of the wealth that comes from tech is located in California. And then that wealth is then used to buy real estate in other parts of the US. If all of a sudden there's a belt tightening in tech, maybe some companies go out of business, there's some layoffs, the bonuses aren't as good, you're going to see a lot of these California movers and investors become much more conscious about what they're doing in real estate. You're going to see a lot of them want to sell their asset. You're going to see liquidity increase in markets like Idaho and Nevada, and you're going to see prices start going down. So pay attention to tech. A couple things I would look at. Kathy Wood's ARK Innovation ETF Fund. What's the price of that doing? What's the price of Tesla? What's the price of Zillow? Where is that moving? That's going to be a good bellwether for when this reversion in California demand is going to occur and when prices could become more cheaper in Idaho, Nevada, Arizona, Texas. So guys, I hope you enjoyed this video. I think the historical data and context is so important right now in a time when attention spans are so short and there's a new news article on the housing bubble every week. We really need data and historical context to inform our decision making on real estate. And look, there's nothing new about this California exodus. It happened 20 years ago in the same way. It caused a similar type of appreciation in the same markets and eventually led to a crash. I suspect the same thing is going to occur again. If you guys enjoyed the data presented in this video, please make sure to hit that like button. I love sharing this data with you guys. It just makes it easier for me to do that if you hit that like button. Also, please comment. I want to hear what your thoughts are on the real estate market. Are you in one of these markets that is really being affected by California investors? Let me know what you're seeing. Also, make sure to subscribe. I have 2 to 3 videos per week with this real estate content. Next Wednesday, we're going to have a deep dive into Raleigh, North Carolina's real estate market. I know a lot of you guys have been requesting Raleigh, so you're not going to want to miss that. Make sure to subscribe. All right, guys, until next time, this is Nick from Reventure Consulting signing off.